Right. Sudeep, I wanted your view on the cement stocks. And the one that I'm going to talk about is Dalmia Bharat. Prabhudas Leather, they have come out with a note on Dalmia Bharat. They've had an interaction with the management and they maintain their accumulate rating with a target price of 2,273. They are valuing the company at around 11 times on a forward EBITDA, so 11 times EV upon EBITDA. Let's run you through the rationale. They expect Dalmia Bharat to actually be a big beneficiary of the higher prices in South as well as in East India in the first half of this fiscal. And they are broken up into various aspects. So point number one, on demand, they say volume is expected to take a hit in the first quarter. That's because of the sluggish demand, especially in East amid the monsoon. While southern region, demand was a little bit better than East, but now it's getting affected because of the monsoon as well as flooding in various regions. That's point number one. Point number two is the good part with pricing. In East as well as in South India, pricing is higher by around 12 and 35 rupees a bag. This is in comparison with the average that we saw in Q4. So even after the recent price pullback that we have seen in the month of June, cement prices are still up by 10 to 15 rupees higher in comparison to Q4 FY25. Point number three, what does this mean in terms of an EBITDA per ton? They are saying the improvement in near-term performance is likely to be led by higher pricing and flattish cost structure. This in turn would mean that the EBITDA per ton improves by around 200 to around 250 rupees on a sequential basis from the levels that we saw in Q4 FY25. So that's a big thumbs up out there. Pricing is going to play its role. Costs are more or less flattish. Big uptick in terms of EBITDA per ton. They're also saying in a longer term, the management is confident of achieving cost savings of around 150 to 200 rupees per ton. That's by FY27. And the few factors that they've laid out is improving their renewable energy mix and also reduction in logistic costs. So that's a longer term plan in terms of cost reduction. Finally, on capacity addition, they've already announced 6 million ton expansion at Belgaum as well as in Pune. The capex they've laid out is around 3,500 rupees, 3,500 crores. And this is expected to be completed by the end of FY27, which by that time, the total capacity will move up to around 55.5 million tons. Also, put all this together, Dalmia Bharat, one of the big gainers today. Sudeep, what do you make of this one? Dalmia Bharat went through a big price